Good afternoon, everyone, and thank you for joining us in another BDO Securities Trade Talks corporate series. And for today, we are joined by the management team of ACEN Corporation. I'm Greg Ilag, BDO Securities Analyst for Power and Utilities, and I will be your host and moderator for today's event. So, allow me to share some reminders before we proceed. Attendees are muted and in listen only mode. We will be entertaining questions right after the presentation. And should you have questions, you may send it anytime through your Zoom screen options in the Q&A box. So to formally begin our presentation, let me call on BDO Securities Head of Sales, Mr. Jasper Jimenez.
Hi, good afternoon, everyone. Welcome to another session of our Trade Talks corporate series. Today, we are privileged to have ACEN Corporation as they give us the latest updates about their developments and future plans. We hope that you make the most out of this opportunity to ask your questions directly to the management team of ACEN and use the information discussed today to aid your investment decisions and to enrich your trading journey with BDO Securities. Thank you for being part of this webinar and enjoy the rest of the session.
Thanks, Jasper. So let me introduce our distinguished speakers for today. First is Mr. Jonathan Back. He is the Chief Financial Officer and Chief Strategy Officer for ACEN. He is a lawyer and banker with over 25 years of experience in the legal, investment banking, and private investments sector. He also has a significant experience in equity markets, corporate finance, and in advising large infrastructure, power, and telecom projects. And then we also have with us today Mr. Gabriel Blaza. He is the head of corporate planning and investor relations for ACEN. He has been with the Ayala Group of companies for the past 11 years and was previously the chief financial officer and head of corporate strategy for AC Motors. Mr. Blaza received his Bachelor of Arts degree in Management Economics from the Ateneo de Manila University and his MBA from the University of Notre Dame. He also earned his CFA charter in 2015. So I now turn it over to Mr. Jonathan and Gabby for the presentation.
Thank you, Greg. And first of all, let me thank everybody for joining this call. The clients of BDO Securities, we are very happy to be with you this afternoon. And we'd like to go through some of the highlights of our company, ACEN, for you, investors in Philippine companies generally, and hopefully specifically in ACEN. If we can move to the first slide, we're going to just go through what we call ACEN at a glance. Well, in a moment, but before we do that, just to reiterate that we are the renewable energy platform of the Ayala Group. Other companies, of course, like Ayala Land, BPI and Globe, but we are the newest of the core companies, having only been founded in 2011. And if we can move to that next slide, please. You'll see ACEN at a glance. We were established in 2011 as the energy startup, if you like, within the Ayala Group. And we have now graduated pretty quickly from being an investor in other people's power projects to being a developer, builder, and operator of large-scale greenfield renewable energy projects. If you had to summarize ACEN in one sentence, that is what we are today. And we want to show you what that story looks like for ACEN. As you know, we're listed on the PSC, and that happened after we effectively conducted a re-IPO when we took over Finmar Energy. And today we are owned a little bit over 58% by Ayala, the Government of Singapore Investment Corporation, 16.9%, and free float around 25%. Today, we have 4.7 gigawatts of attributable capacity in 5 markets, of which about 88% is contracted. One thing I should stress is that if you look at the bottom of the middle column, you can see that in terms of operating status, 37% is fully operating, 26% is partially operating, and 37% is under construction. That partially operating piece is mostly in operation. So today I would say that more than 50% of our capacity is kind of in full operation. But nevertheless, it shows you just how fast our growth is because of the amount of power that we have under construction. The markets that are most important to us are on that left-hand side of the chart of the screen there. Philippines is our home market and is our biggest market, and we think will always be our biggest market. We're at nearly 2 gigawatts of capacity here. In Australia, we're at 1 gigawatt. In Vietnam and Laos, we're just shy of 1 gigawatt. India, 500 megawatts, and then Indonesia and other countries around 300 megawatts. Most of our capacity is solar, but wind is, I'd say, going to feature more and more as part of our portfolio in the years to come. On the right-hand side, what the key strategies that we really need to have at the top of our minds are, number one, focus on execution. We have a lot of projects. We need to be excellent in our execution of those projects. We need to deliver them on time and on budget as much as we possibly can. Sometimes things happen that cause you to go not to be able to do that. You can have, especially here in the Philippines, we can have weather events that make it difficult. Sometimes we need grid connections to enable the power to get out into the market. And we are not responsible for all of that, but we do our level best to make sure that the projects can be delivered on time and on budget. Secondly, we've got targeted geographic diversification. While the Philippines is our home market, we have benefited significantly from our exposure to international projects. We are working with other developers in these other countries, notably Vietnam, and that is a way actually for us to de-risk the amount that we are doing across our portfolio, because we've got other people doing a lot of the hard initial work to bring the projects to fruition. Thirdly, we are looking at, we've already done the world's first energy transition mechanism project, where we sold our South Luzon thermal coal-fired plant to a group of investors. And we are now looking at using what are called transition credits to further accelerate the retirement of that coal plant as a template for other companies and other projects around the world to be able to accelerate the retirement of coal, which, as I'm sure you all know, is by far the dirtiest form of generation that we have in terms of carbon dioxide and particulate emissions, etc. The world needs, frankly speaking, a lot less coal if we are to hit our goals of getting to net zero in 2050. On the next slide, if we can turn to that, you can see how rapid that development of renewables has been since 2019, going from 864 in 2019 through to about 4,700 at the end of 2023. And reality is that we're very, very close to getting to 5 gigawatts of capacity, because we have a project here in Quezon province, a 335 megawatt wind project called Isla, that is not yet in that orange bar for 2023. But it will soon reach the point of moving into construction. And when it does, and you add that capacity, we will be then over 5,000 megawatts. Some of the key points in our journey since 2019 are listed above in the columns there. And you can see that we have our 2030 goal highlighted there. Our aspiration to get to 20 gigawatts of capacity by the end of 2030. But just to stress that includes capacity under construction. It's not just what's in operation. So that's a quick snapshot of how we have gotten to where we are today in terms of capacity growth. If you turn to the next slide, please, moving on one. This summarizes a lot of what I've just been talking about, how much capacity is under construction, operating, partially operating, how it divides out between geography and technology. I don't need to go through all this again, but it's an easy way for you to visualize how much capacity we've got currently operating, partially operating, and coming and under construction. On the next slide, this shows you how our output has evolved since the beginning of 2022, both by technology and by country. And you can see that our renewables output for the first 9 months of 2023, which are the latest publicly available figures, grew by 27%. Now, because we sold the coal-fired plant in the South Luzon thermal plant, the black portion that you see being very important in 2022 has largely disappeared. We've still got some diesel-fired generation, which you can see still cropping up in the first, second, and third quarters of 2023. But broadly speaking, the generation mix is moving definitively in favor of renewables, as you can see from those charts. On the next slide, this is a way of us showing that most of our capacity is sold under contract. Sometimes people have a misconception about ACEN that we do all these merchant plants and we're just selling into the spot market. And that actually isn't the case. As you can see on the left side, if you look across all of our capacity for the first 9 months of 2023, 88% of that was sold under contract. 85% in the Philippines, 89% internationally. Now, you may say, but you've got all these merchant plants in the Philippines. How does that work? Well, the truth is that most of the power that's coming from those merchant plants is actually being sold to our customer base. Obviously, there's Meralco, there's some other very large industrial customers. But the video that you saw right at the very beginning of this presentation from ACEN Res is about selling electricity to commercial and industrial customers, like office towers or a bank or a factory. Those are the customers who are buying our power. So when you look on the left-hand side, you can see that where it says contracts non-fit, and FIT, by the way, stands for feed-in tariff. Those are projects where every kilowatt hour that you generate is bought by the government. Whenever you happen to generate a kilowatt hour, it gets bought by the government for a fixed agreed price. I'm not talking about those. If you look at the yellow-orange portion, the contracts, that's where we're selling to an office building, or we're selling to Meralco, or we're selling to a factory. That's where all of that sits. So even though we may have a project that initially is selling its power into the spot market, actually that power is being bought finally by one of our customers who operates a factory or an office building. So I hope that gives you some idea of actually how much contracted capacity we have, which is a lot. And truth is, we always aim to keep our contracted capacity at a high level, probably close to 90%, both now and in the future. That's like almost certain to be the case. And that is important because it means that in the future, our revenues and our earnings are going to have a high degree of predictability. Our goal with ACEN is to create a company that operates a large portfolio of renewable power plants that is churning out energy and therefore revenues on a predictable basis year over year. And the reason I say year over year rather than quarter by quarter is because in the renewable energy business, you do have times where it's sunnier or windier. Here in the Philippines, right now, we have lots of wind. So our wind turbines are making a lot of revenue. In the middle of summer, you tend to find that the solar plants are doing well. But in the rainy season, when you don't have much wind and you don't have not as much sun, unsurprisingly, the revenues, the kilowatt hours and the revenues come down. it helps that we have many projects internationally so that we can diversify a bit. But overall, quarter by quarter, you will see some ups and downs just because of what the weather does to us. But year over year, we will be delivering increasing earnings as the projects are built, they start generating electricity, and they start making revenues that will ultimately accrue to the benefit of shareholders. On the next slide, this talks about our Philippine assets, and I'm going to hand over to Gabby at this point to talk in a bit more detail about that. Gabby.
Thanks, Jonathan. So this slide shows our overview, as he said, of our Philippine assets. You can see we have quite a sizable and growing footprint of renewable energy plants here in the country. Primarily, as you can see in Luzon. One of the reasons for this is that a large part of the demand for power in the country is in Luzon, and the grid connection for Luzon is actually the largest one. Whereas we know NGCP has its connection base. We can see here we have nearly 1.9 gigawatts of attributable capacity in the Philippines, of which about a large part of that, as you can see, is renewable. A couple of things to highlight here. One is, as you can see, some of these plants in green, a few of them, such as 585 megawatt San Marcelino and the Palawig solar plant. What we're trying to do with ACEN is actually construct larger and larger solar and wind farms as we strive to reach our 2030 targets for attributable capacity. This still doesn't include a recent win in the recent government auction, the GIA of Isla Wind, which should add a significant amount of capacity. Where you see that Alamina's battery storage, it's in that area in the Quezon province. You will see that we will be, as soon as that project receives approval to proceed internally, we will be adding that wind farm to this map, and it's one of the largest, if not the largest, wind farms in the country. On the right hand side, you can see the same statistics that we saw before. We are majority solar in the Philippines, and a large significant portion is actually in operating status, and a large part of which is in partially operating status as well. We go to the next page, please. Just to give an overview of some of our plants for you to visually appreciate. A couple of plants in the Ilocos region, Pagudpud Wind and Kappa Wind, both of which are very near completion. As you can see in the bottom left of the middle bottom left, Pagudpud Wind should actually reach full capacity by the middle of this year. And Kappa Wind should reach full capacity and operations in the middle of this year, in the first part of this year as well, I'm sorry. So additions to our portfolio coming in 2024. Next page, please. Just wanted to highlight again San Marcelino Solar, which as of now is the largest solar farm that is under construction in the country. This solar farm was built on Lahar from Mount Pinatubo, which is otherwise unfit for agriculture. We have been able to repurpose the land when we acquired it for renewable energy. As a matter of fact, we've added just in December phase 3 of this solar farm, which you can see in the bottom left. These sections highlighted in yellow. This will be phase 3 of this solar farm. So it's built over 500 hectares, as mentioned, and it's set to power, as you can see on the right hand of the slide, over 100,000 homes. So we believe this is one of the most significant additions to our portfolio in the Philippines. Next page, please. Other farms, a couple of solar farms where we have partners. So Arayat, Mexico, which is a partnership with Citicorp, and Cagayan North, which is another partnership in the northern part of the region, both of which are set to be starting full grid injection by the first quarter of 2024. Next page, please. Couple of merchant solar plants, Pangasinan Solar and Palawig. You can see construction well underway, with Pangasinan Solar coming into operation by the third quarter of this year, and Palawig next year. So as you can see, especially for Palawig, this is actually the second phase of that solar facility, and this the second phase is about 300 megawatts that will be added to our capacity as we try to service the market. And just to highlight something that Jonathan mentioned, when we say a merchant plant, it's not actually selling into the open market. we have a growing retail electricity supply business that will essentially be the off-taker of these merchant plants, with the contractor capacity being well into the 80 to 80 to 90% of our of our generation. Next page, please. I think we'll leave this for. Sorry, this slide should be somewhere in the international section, so we'll skip this for now. There's our Australia facility. Just wanted to highlight a couple of portfolio updates. So Isla Wind, as I mentioned, this is the facility that we won in the last green energy auction for the government. As you can see here, it's just quite a sizable facility, 230 megawatts with the option to upsize to 345. You can see in the bottom left picture where it stands vis-a-vis Laguna de Bay. So it will be on the right side near the Pacific Ocean. And we're making a sizable investment in this facility because of its location and the area in which it's located. Getting to the site is actually quite difficult. So we had to build roads. We have to build the jetty so you can flow the construction around the sea. So it's quite a sizable investment that we're going to make in this wind farm. So it's our third GF winning project, and it's going to start construction later this year. Next page, please. Just to highlight something we're doing in Laguna de Bay, it's just very near here. You can see here we signed an agreement with the Laguna Lake Development Authority to lease about 800 hectares to potentially do some large-scale floating solar. And again, as we aim for larger and larger capacities, this has the potential for up to a gigawatt of renewables capacity if and when this is completed. Next page, please. For this one, if I could pass it back to Jonathan to talk about our international operations.
Yeah, thanks, Gabby. Just very quickly, you can see how many projects we've got overseas, and it's really dominated, I'd say, by Vietnam at this point in terms of operating projects. And you can see that with all of the black-colored projects that we've got there. We went into Vietnam when they announced there was a government feed-in tariff again. So every kilowatt hour you produce, you get paid a flat fee for that. That's been a very successful foray for us overseas. We've got projects also in India. And then in Australia, I'd say in the longer run, Australia will become our second most important market after the Philippines. And like the Philippines, it's got a market as its basis. It's a market in countries like Vietnam and Indonesia. The state electricity company buys all the power off you. That's not true, obviously, here in the Philippines. It's not true in Australia, where you have market participation. So we are able to think in market terms in both of these countries. Actually, on the next slide, you've got you've got some construction updates which show you what's going on in India, in Laos, and in the US. The one we had to skip over earlier showed you the very, very large solar farms that we've got going on in Australia. The first one of which, New England, is already operating virtually at 100%. And the other one, Stubbo, is due to be in full commercial operations by the end of next year. We're hoping that we'll start to see some generation from that, potentially even by the end of this year and certainly in the first quarter of next year. On the next slide, yes, this shows you our Australia pipeline. There's the two projects that are already either in operation, New England Solar Phase 1, kind of in the middle of the map. And then in that box that comes out to the right-hand side, you can see in green the Stubbo solar plant. These are shown as 400 megawatts. That's because in Australia, they always measure power capacities on an alternating current AC basis, whereas here in the Philippines, we do it on a DC, direct current basis. So both of those are 520 megawatt DC, but 400 megawatt AC, because you get losses as you convert from direct current to alternating current. You don't get that with wind. Wind is an AC capacity right from the get-go. Anyway, the key point there is that we've got a lot of projects under development in Australia, which we're actually very excited about, because what's happening in Australia is that it's dominated by legacy coal-fired power plants, which are becoming old and unreliable. And as such, the country needs to build out its renewable capacity at a very large scale. Just to put it in context, average electricity consumption in the Philippines is about 1 megawatt hour per person per year. In Australia, it's obviously a smaller population, but average electricity consumption is 12 megawatt hours per person per year. That includes industry and all the rest of it. But it's an illustration of the fact that actually the level of demand in the country is very, very significant. And it's also driven by not just replacing the old capacity, it's also driven by decarbonizing existing and new industry. People want to build what are called green steel plants in places like Western Australia. You can see there in Western Australia, we have a new partnership with an Aboriginal group called the Yindjibarndi. They have 13,000 square kilometers of land available for renewable projects. And one of the things we expect to happen there is for renewable energy to be generated there and go into projects like green steel, where all the energy is ultimately coming from the sun and the wind. It's very exciting, but the capacity you need to install for this is vast. It's thousands and thousands of megawatts. So again, this is one of the reasons we're quite focused on Australia after the Philippines as a market. On the next slide, if I could ask to turn to that, this actually summarizes that partnership that we've just done or did earlier last year with the Yindjibarndi. And we've already got one memorandum of understanding in place with Rio Tinto, who are one of the world's largest mining groups anywhere, and they have huge operations in this area of Australia primarily for iron ore mining. On the next slide, we've also just even more recently announced a partnership with Indonesia's largest renewables company, Barito, to develop more wind projects in Indonesia. Wind is not yet nearly as prevalent in Indonesia as it is in Vietnam or increasingly here in the Philippines. Indonesia, if we're to be honest, has been slower than other Southeast Asian countries on the pathway to renewables, but we're hoping that this changes, and we want to be very well positioned to capitalize on that. Next slide, please. This shows you construction updates. We've kind of covered all this already, so I don't need to go into it in detail, but the main point to note here is that while there's a lot of projects here still in construction, also quite a few of them, like Pagod Wind here in the Philippines, or Masaya Solar and New England Solar internationally, are getting close to full operations at this point. On the next slide, please. This shows you, if all of those projects that I've shown you on these maps come to fruition, which they will be, and the ones currently under construction, once they start generating on a pro forma full year basis, you're going to see around 9,100 gigawatt hours of generation. And obviously that translates into revenues that come from that 9,100 gigawatts of the various tariffs, etc. So it's highly significant. On the next slide, this shows you our 2030 vision. It's not carved in stone, but it is a goal for us for the end of 2030 to get to 20 gigawatts of capacity in operation and in construction. And you can see how it divides out between the different countries, led, as you might expect, by our home market of the Philippines, where we would like to get to 8 gigawatts of capacity by that point in time. And just to reinforce the point, we do have a pipeline that will allow us to do these capacities. Today, in January 2024, we do have pipeline available to us that will allow us to get to that 20 gigawatts if we're able to get the transmission connections and all the permits and the funding in place. But there's 7 years between now and the end of 2030. So we're pretty confident that we can do it. And the world needs it. The world actually, according to all of the science, it says that we should be installing as a planet 3 times as much renewables today as we currently are if we're actually to hit these net zero targets in 2050. So we and all of the other companies need to be doing a lot more actually to meet these goals. On the next slide, please, on the financial and operating highlights, Gabby will just go through that very, very quickly and highlight how we're thinking about running the business as a going concern. Gabby, you can quickly just run through this.
Yes. Thanks, Jonathan. So just quickly, a couple of pages on our historical numbers. So this slide summarizes our profitability for the period. You can see over the past 3 years, our revenues on the left-hand side have increased about 32% on a compounded basis. And we believe we're on our track. We're still processing the full year numbers at this point, but we believe we are on track to continue growing this significantly as well in 2023. Meanwhile, our attributable figures, the middle and the right-hand side, which more fully reflect our international and joint venture operations just because of the way our company is structured, they have also grown quite sizably. Attributable EBITDA in the middle grew thanks primarily to our return to a net selling position and stronger retail tariffs. Meanwhile, for attributable net income, we posted at 60%. If you compute that, increase year over year to about 6.6 billion as of the third quarter, as we again grew our renewables capacity, taking that next step. But this is offset somewhat by higher power and curtailment costs. Next page, please. From a balance sheet standpoint, our balance sheet remains robust. So the third quarter, our total assets stood at 276 billion, while our total equity also grew north of 20%, as we continue to raise capital to fund our growth targets. I'll get more of that later. And amid this expansion of our balance sheet, our net debt levels on the right-hand side remain quite healthy, with a consolidated net debt to equity ratio of about 0.1 times, which is actually lower than the previous year. If you took a look at the right-hand side, this is helped by our issuance of 25 billion, the first tranche of our issuance of preferred shares, which we executed in the third quarter of 2023. Okay, last page. This is a critical slide, the next page, which I want to spend some time on, because this is a slide that you will see moving forward as we report our earnings and our performance on a quarterly basis. So this slide shows how presents our profitability in a way that reflects how we actually manage the business. In the past, I think it's fair to say that, or we think it's fair to say that ACEN can be somewhat challenging to understand because there's been a lot of movements in our portfolio as we could change the composition of our business. And we've had some transactions that have occurred over time, over the past few years. So just focusing on the first line in bold, which is called income from operations. This refers to our attributable share of net income from operating units. This is basically selling electricity. So whether it's what we call merchant, which is selling to the spot market, even if there's a counterparty on the other side, it's with direct contracting, it's with FIT, it's with if we have a structure with an international partner where our compensation or our economic return is in the form of a preferred share or a development loan. All of that is in here on an after-tax basis. So it is our going concern. And the first 4 lines are what we call our going concern performance, our going concern performance or profitability as a business. So this first line, because of that structure, this allows this first line considers, for example, the bottom line results of our wholly owned operations in the Philippines and Australia, as well as those in our other markets that we mentioned earlier, where we hold with strategic partners. So we expect this line over the next years as we grow from 4.8 gigawatts to 20 gigawatts to grow significantly along with that as we expand our capacity. The next 2 lines reflect our cost at the center. The first line is our operating assets. The next 2 lines are referred to our costs and expenses at the center. So at the corporate center, this is both to keep the business running. And for example, the second line is our corporate overhead. So what we need, the infrastructure to support and to support our growing portfolio, our development expenses. So when we spend to develop a new wind farm or solar farm, the cost for that go into this line. So we can expect this over time to go up as the portfolio grows, but not necessarily at the same rate, because obviously we will try to keep overhead quite reasonable, and we expect development expenses to match our growth plans for the business. Net financing cost is we expect as we grow from 5 to 20 gigawatt to 20 gigawatts. So of course, we will make sizable or significant, but well considered use of debt. We will not explode our balance sheet or overload our balance sheet as we reach our capacity. You can see here, and since the third quarter, this is positive. But that's not the trend that we see moving forward. This will be negative as we move ahead, as it will be a cost to us. We had some good interest income as we took on the proceeds from our preferred shares, but moving forward, this will be a cost to us. The fourth line is the most important line we'd like everyone to focus on because this is our going concern, profitability, as I mentioned earlier. And as you can see in the middle of the page, we posted about 3.9 billion in core operating earnings as of the third quarter, which is more than double the year ago period. So moving forward, we don't expect this to really double year over year. This would make us a very large business, even by overseas standards. But we do expect this to grow at a meaningfully positive rate that demonstrates our ability to take advantage of the move to renewables as we put more plants online. So we would like you to focus on this line moving forward. So that being said, the next two lines account for non-recurring items. What we try to do is really separate the non-recurring items if they occur, if and when they occur. So value realization is our cash, is pure cash when we say divest an asset or sell down. As you can see here, as of the first 9 months of 2023, we posted a valuation gain of 1.06 billion. This from our sell down of a small stake in our Salak Darajat assets in Indonesia, and others, which is everything that is non-cash, whether it's positive or negative. A large part of that is a remeasurement gain, just relating to the same transaction that I mentioned in Indonesia. So all in all, we can see that income after taxes of the third quarter, we posted about 6.6 billion, the number I mentioned a few minutes earlier from the previous page. And this is the equation that we would like to present to our investor community moving forward as we grow our business.
Okay,
And
thanks, Gabby.
Thanks. And that is it.
Yeah. Moving on. Next slide, please. One of the things we're proud of at ACEN is being a leader in the transition to a net zero world. We already did the world's first market-based energy transition project where we sold our South Luzon thermal plant to a group of investors. And more recently, we just announced at the end of last year a partnership with the Monetary Authority of Singapore and the Rockefeller Foundation to use what are called transition credits to effect the early retirement of that coal plant, potentially as soon as 2030, which would be only 15 years of operations. I saw that there was a question in the Q&A as to kind of who's bearing the cost of this? Well, the truth is that those transition credits would be bought by international investors or international participants who need to be able to offset their carbon emissions. And it's essentially a mechanism to inject money into the energy industry to pay for the early retirement of coal assets. And that will both allow the owners to be paid off. It allows the employees to find other new jobs within the same company or be retrained. And finally, it allows a subsidy for new renewable energy, including battery storage, which will allow you to replace a baseload coal-fired plant with what is effectively near to baseload solar, wind, and storage altogether. On the next slide, which I think is going to be our last slide, here are the key strategies that we are pursuing as a company. And just so you've got them in your head, Geographic diversification has been core to what ACEN has been doing for a long time, and there are very good reasons for it. We don't want all our eggs in any one basket, either by technology or by country. Strategic partnerships is something that has worked very well for ACEN in terms of growing its portfolio. It's better for us to work with people who've already done a lot of the legwork for development, and then for us to come in and finance those projects and probably in some cases take them over and operate them. New technologies is again something core for us. Here in the Philippines, it means floating solar on the Laguna de Bay, etc., as Gabby mentioned earlier. Elsewhere, we're looking at new forms of battery storage, etc. Access to transmission is something we haven't talked much about, but honestly, it's probably the critical issue for most projects in most countries. Are you able to connect your project to the grid? Because if you can't, there is no project. So for us, building our own transmission lines here in the Philippines to connect to the national grid has been critical. The middle box there, development of scalable sites. You heard Gabby talk earlier about that San Marcelino solar plant in Zambales. That's a classic example of what we're trying to do now. Our projects are starting big at scale, but they're also going to be scalable, to be much, much bigger, because then we're able to get economies of scale on transmission assets, access roads, etc. Finally, you heard me talk earlier about how the vast majority of our generation is going to be contracted. That's going to remain the same, but we do want to retain that buffer at the top, so to speak, to capitalize on market opportunities and also to avoid being overcontracted. So at that point, I'd like to thank you for listening to what we've had to say so far. And we've got time, I believe, for some questions now, which I guess will be moderated by our friends at BDO Securities.
Yeah, thanks, Jonathan and Gabby, for that insightful presentation. So we now proceed to the Q&A. So I guess given that there's a lot of questions, we'll dive right in. So the New South Wales state government is looking to extend the life of the Earing coal plant, which could remain open beyond 2025 to ensure sufficient supply of electricity. How will this impact your operations in that region?
Okay, so it's the Eraring coal plant, and yes, there was a recent report commissioned by the government last year that recommended the extension of life of this project. Why? Because to be honest with you, if they don't keep it open, the lights are going to go out in Sydney. It's almost that simple. Australia, almost all the Australian states rely on very large, old coal-fired power plants for their baseload capacity. And without those plants today, honestly, the lights go out. Because yes, there's lots of solar generation in the middle of the day, still not enough if you were to lose these coal plants. There's a lot of solar generation in the middle of the day, but that doesn't help you in the evening peak at 6 p.m. when people go back to their homes and turn on the television and the air conditioners and all the rest of it. That's why they've had to extend the life of that plant. Now, what they hope is that will be replaced by this combination I mentioned just a moment ago of solar and wind and battery storage, so that you create these dispatchable plants that can take the place of coal. And by the way, we need that here in the Philippines. It's needed in Vietnam and Indonesia and everywhere else. It's just that the reason why Australia is ahead on this or earlier is because their coal plants are so old. Most of them were built in the late 1970s and the early 80s. So not only are they old, but they're also being run so that they go up and down each day. And that is the worst way to run a coal-fired plant, as you may know. That's why they're becoming unreliable. So we have no problem in seeing Eraring's life extended, because the last thing we want to see, as I said, is the lights going out in New South Wales. But the government is planning for the replacement of that.
Okay, it looks like the grid there is also tight, similar to here. The next question we have here is that we know that the company is aggressively expanding and putting up new investments. When do we see the company gain better and have a stable financial status and provide dividends?
Okay, so we actually do pay dividends even today. They're not super high. And the truth is that as a fast growing company deploying a lot of capital into new projects, it's not, I mean, paying out dividends is something we want to do, but it's not going to be the top priority. I mean, if you look at very large old companies where, like the big banks in the Philippines, whether it's BDO or BPI, whoever, they are able to pay lots of dividends because they are very mature businesses. We are the opposite of that. We're a very fast growing business. Now, in terms of a stable financial status, what I think investors want to see from us is consistent earnings growth. And you saw the slide that Gabby talked to earlier about core operating earnings. That's what we want investors to focus on. We want them to understand that our delivery of core operating earnings is going to go up year over year, double digits, well into double digits, year over year over year. So in a way, it won't be stable because it's going to be growing. But it will be growing pretty fast over the years to come, to be frank, which is how we would assume investors would like it to be.
Okay, I think we will also see more growth once the new capacities come online. Yeah.
Exactly. And what I think we need to avoid in ACEN are kind of weird things happening that make our numbers hard to explain. We want to simplify the business so that people understand that ultimately we are in the business of generating electricity, selling it, and collecting revenues. That's it. When you really boil it down, that's it. That's what we're doing. Obviously, we need to make a good operating margin. We aim for EBITDA margins more than 70%. That's what we're aiming to do for all of our projects in all of our countries.
Got it. Okay. The next question that we have here is that the geopolitics and harsh climate has changed the outlook for renewable energies. Do you feel that this will also affect ACEN's future?
Yeah, I'm not sure that we. I mean, if by geopolitics you mean things like what's been going on in Ukraine or what's happening what may happen in Taiwan. Not really. In fact, if anything, we think that it's accelerating the move to renewable energy. There were some interesting numbers that came out last year that showed Russia's invasion of Ukraine accelerated the deployment of renewables globally quite a bit because people suddenly realized that fossil fuels have geopolitical risks attached to them, whereas the sun and the wind in your home country don't. It's not quite as simple as that, but almost. One of the reasons the administration of President Marcos is so enthusiastic about renewables is because it lessens the geopolitical risks associated with fossil fuels. We don't have to buy as much coal or gas or whatever it is from other countries. We can use the resources that are here in the Philippines. In terms of the harsh climate, again, to be frank with you, if people see harsh climate, it makes them more inclined to support renewable energies and reduce the reliance on carbon emitting sources of generation. So to be honest with you, we would say that geopolitics and what's going on in the natural climate, if that's what the questioner meant, is actually, frankly, beneficial to our outlook.
Yes, I think the geopolitics increases the need for more renewables in our system. Yes. So the next question we have is, I'm not sure if this is available. What is the impact of the recent acquisition to ACEN's EPS in 2024 and 2025? He means in the short term as payback period of the acquisitions, maybe long or short. I think he's trying to know what's the payback period of your recent acquisitions, typically.
Yeah, I mean, I'm not quite sure which acquisition specifically. I mean, we did buy into some solar projects in Vietnam from a company called Super Energy. It would be the only problem is that is we haven't yet onboarded all of that capacity to our portfolio because it's that project, that acquisition is happening in stages. Maybe the one thing I would say is that broadly we are not in the M&A business. We are in the greenfield development business. So to be frank, you should not expect to see us do a lot of M&A. We might sell and buy things at the margin across everything, but we're not really going to be out there buying 2,000 megawatts of capacity from some other company in the Philippines. That's not our goal.
Okay, yeah. The next question here is, are you at the stage where your assets are generating more energies than demand that is requiring storage provided, like, let's say, Tesla, for example?
No. I mean, especially here in the Philippines, every kilowatt hour that's generated gets consumed. Now, that doesn't mean to say that we shouldn't have storage, because we should. A combination of particularly solar plus storage works very well in the longer term to reduce the sort of bulge of solar generation in the middle of the day that could ultimately, might go to waste. But remember that here in the Philippines, we've got demand growth of 5-6% a year. The bigger issue in the Philippines is that we run out of energy, electricity. Not that we have too much. And even in Australia, like I told you, those coal plants, if they go offline, the lights literally go out. There isn't enough power in the system to meet demand. Okay. So in our core markets, we're actually more at risk of being undersupplied than oversupplied.
Okay, the next question here is, does ACEN have a plan to create a real estate investment trust company from your power producing assets?
Right now, we do not. We did a transaction where we sold some land to a REIT, where we sell the land and we then lease it back from them. And for us, that was a simple case of realizing some value from land that we had increased the value of significantly by putting a solar farm on it. But just to stress, we keep the actual revenue generating assets, which are the solar panels themselves, and we can, if we want, buy back the land in the future. So it's really a way of recycling capital from something that's in kind of non-core, maybe holding some land, into our core business. If we're paying a 7% yield to a REIT, but we can redeploy that capital at a 13% return, that makes sense for us.
Okay, yes. The next question here, so we're trying to go as much as we can here. The market for wind farm turbine is significantly larger in the West, where the weather is significantly different than the East. How are you addressing the related research issue for the turbines to ensure that downtime is low and that maintenance is competitive as in the West?
Okay, so wind turbines come in different types. They're not all the same. Obviously, they get bigger and bigger and bigger, especially when you go offshore. But if you look at the turbines that we are now installing, they're much bigger than the ones that we were installing only a few years ago. But there are different grades of turbines. And here in the Philippines, we need turbines that can cope with typhoons, basically. In Tasmania, we need turbines that can cope with consistent, very strong winds. It's not like a typhoon which passes through in a couple of days. In Tasmania, you need turbines that can keep generating through 40-kilometer-an-hour winds day after day after day after day. So there are these different types of turbines that you need. We've now had a lot of experience building and operating turbines, especially here in the Philippines and in Vietnam. And we will soon do another project here in the Philippines, the Isla Wind. In Australia, we plan to do a lot of very large wind farms. We're not too concerned, actually, about the the maintenance issues, in the sense that we've now had a lot of experience around it in the environments in which we operate, especially here in the Philippines and Vietnam.
Got it. Okay. The next question here is that focusing on the stock price, what are the three major factors that are, oh, sorry, it moved. Three
Yeah.
major factors that are causing the foreign funds to sell out of ACEN, despite the acquisitions and the expansions that the company has announced?
Yeah, I mean, actually, some of our biggest foreign investors have and actually do hold our shares, and if anything, have been, though some of the most important have actually been increasing their shareholdings during the recent share price weakness. So I don't think it's a one size fits all there. I'd say that globally, we've suffered from, or rather, when you look at it from a global perspective, we have suffered from a few things. Number one, first and foremost, is that the Philippines as a market has been a bit challenged in terms of foreign investor flows, because it's not just our company. Almost every company in the market here has seen outflows from foreign investors, just because of that's what's impacted the Philippine market generally. And unfortunately, ASEAN as a whole, Philippines specifically, has been hit ironically by the continued massive growth that you've seen in the tech companies in Asia, in the US. I mean, unfortunately, we're now at the point where a 1% movement in Microsoft's share price would be equivalent to almost, the Philippines and Vietnam and Singapore all collectively falling by 20%, something like that. That's the sort of world we're living in at the moment. That's one issue. I think, secondly, renewables globally have had a tough time, I'll be honest with you, recently. Some of the Western companies have found themselves with cost overruns or projects that they're just not able to start building because of cost increases. I'm happy to say that we haven't really been affected by that in the same way, and we don't plan to be, obviously. But I think there are a number of factors that have impacted on our own share price in terms of the foreign funds, but it's dominated by honestly weaker interest in the Philippines. Now, we're told by a number of brokers, and hopefully BDO Securities is among them, that foreign interest in the Philippines looks likely to be a bit better in 2024 than in 23. Let's see, we hope.
Yes, I'd also like to add, like, if there's changes to the index weight, like MSCI, sometimes it affects all companies in the Philippines. So that could be a reason to why we see some foreign selling for some names. Okay, I think we have time for maybe one last question. So given that the plan to transition to renewables, who carries the loss from the retired coal plants? What is
Well,
the
I kind of dealt with that one, actually.
yeah, before, yes, it was the carbon credits.
Transition
Yes, yeah.
credits, yeah.
Okay.
We can do another question.
Maybe I'll just skip to the other ones. When is the timeline for the second tranche of the ACEN preferred share offering? Yeah.
We don't have a firm date in mind. I don't think it's something you'd be likely to see in 2024. Can't rule it out, but
Yeah, I think Jonathan's cut off, or maybe there's some technical difficulties. Um,
Hello.
Hi, Jonathan. Yeah, I think you got cut off in the middle of your answer. Hello.
Hello, can you hear me?
Yeah, I can hear you, but your video image is frozen, I think.
Hello, can you hear me now?
Yes, we can hear you. Yeah.
Sorry,
Okay.
I'm dialing in now from a different
Okay.
from a different line. For some reason, my existing connection dropped out. Anyway, please.
Okay. So I think we were on the question of whether there's a timeline for the second preferred share offering, and you said that there wasn't a fixed timeline for this, but it got cut off right there.
Yeah, not a fixed timeline. I think more likely to be next year or the year after rather than this year.
Got it. Okay, so I think that is all the time we have for the Q&A. So for those questions that we were not able to answer, we will get in touch with you to discuss these accordingly. Thank you to all the participants who have dialed in and asked their questions. And thank you to our panel, Mr. Jonathan and Mr. Gabby, for their insightful presentation. So before we conclude, do you have a final, maybe a final set of words for our audience, Mr. Jonathan,
Yes.
before we end? Yeah.
Okay. Well, first of all, thank you, Greg and BDO Securities, for hosting this. We really
Yeah, I think it got cut off again.
I think we're having internet issues, right?
Yeah.
Gabby, hello, can you hear me, Greg?
Yeah, we can hear you.
Okay.
Yes.
Sorry, I was just going to say I want to thank all the clients of yours who've joined us on this call, and please, if there are questions that we can answer through our team, we will do so.
Yeah, so again, thank you everyone for spending your valuable time with us. Thank you for all the attendees also. This has been your host, Greg, so please enjoy the rest of your day.
Thank you. Goodbye.
Thank you.